Toby Copson, managing partner, Davenport Energy in Singapore. Toby, what does this mean for the trading community? Obviously, this has been a fairly difficult few weeks, not the easy gravy train that the Russia war on Ukraine was and delivered bumper profits to everybody. Or am I getting it wrong? Where's the traders at? Is this a market maybe now with this decision that becomes more investable, more tradable?
Good morning. No, I don't think it is. I think everybody's a little bit skeptical because no deal's actually been made. There's a basis for an agreement, but no agreement actually in place or in writing. Fundamentals have not changed. If you look at data to front line in the physical market, we're at sort of 140s plus in Brent. And that sort of tells you all you need to know that the market is still very, very tight short term. I mean, all things aside, I think it's great that we have this ceasefire for, the general populations of the GCC countries, including and Iran. But from a market perspective, it's sentiment driven only, right? Algos have jumped in, they've dropped the price, stop losses have been hit, people have been liquidated. But fundamentally, we still haven't we haven't brought back the volumes that have been shut in or what's on water at the moment. And if you look at what DFL is at the moment, the data to front line, that's pricing in what we lost in March. So even with refinery run rates being lowered in Asia, this is going to cascade for some time. So no, I don't think we're out of the woods. I think if you're long vol, perhaps you have opportunities to make some money here. But if you were levered long going into the announcement last night, I think you were probably blown out. So I think it's fairly dangerous. I think a lot of people, I mean, cash is a position. A lot of people will be looking to see where this goes over the next few days. There's been a hiccup already, as I understand it. Lebanon might have been struck. There may be something going on in Bahrain within the last hour. So total agreement hasn't been come to. And I think at the moment, you'd have to be a little bit cautious about where you deploy risk.
Toby, do we get back to how quickly, I mean, normal flows? What I saw today, the headline that sort of amongst the headlines that got my attention, of course, a lot of flow of headlines this morning, but one was that Singapore said they would not pay the Tehran toll. The idea that if you want to get your products and your crude moving through the Strait, you've got to pay a toll now. That's obviously going to be a big debate in, I would imagine, the final negotiations. But nonetheless, how do you think about the flow building up, the momentum to obviously those leaving, the 100, 200 tankers in the Gulf already getting out? Do you think people will pay that toll? Will the flow move quickly, or what are your thoughts on that?
Well, I mean, at some stage you're going to have to pay the toll. It's a bit of a conundrum because what do you do? But also for Iran, it's a bit of a complex situation because if they start striking ships, then we're back to square one again. But if they effectively close the strait to ships, insurers aren't going to want to get involved. The war risk premiums are going to shoot through the roof again. And then we get into a demand dynamic. So is there an impetus to
I mean, the
actually?
insurance companies have a big role to play here, right? I mean, what they did at the beginning of the war, they made it so punitive it was nearly impossible to risk anything.
Well, that's right. And there's also the cost to people as well that you have to factor in. Over and above that, I think I just want to go back to something you said earlier, is that there won't be 200 ships moving through this 10-day or 15-day ceasefire. I mean, I think Iran were very clear on the fact they said 10 to 15 ships, which is a drop in the ocean in terms of what's sitting idle there laden. So getting back to normality, there's so many moving parts to getting some sort of view on that. And until we see some sort of concrete agreement in paper that is being adhered to, not just by the US and Iran, but also by Israel, because they're a bit of a rogue actor at the moment, and they're not complying to some of the points that have been put forth by both nations. Also, I think if you look at the two lists that have been circulated, one by the US and one by the Iranians, the juxtaposition is huge. They're not aligned, and I don't think most of the terms, a majority of them, will be agreed to. So is this a placation for financial markets? Probably yes. Where do we go? I mean, at the moment, physical pricing tells the true story. Forecasting is very difficult because we don't know what's going to happen with the Strait, and we don't know whether the agreement's going to be in place. So deploying risk, as I said earlier, is an increasingly hard endeavor to manage. So I think for the time being, we'll probably wait these 10 to 15 days out, see what happens, what gets moved, and then we can start looking at pricing the market going forward, depending on the flows and potential volumes coming back online and how easy that is to do.
Toby, just wrapping up with the results of the survey question and getting your sense of, we talked there earlier. So 80s seems to be the winner at the moment, settling back into the 80s. I nearly feel bad using Brent as sort of the cornerstone conversation piece in the last few weeks. Increasingly, it seemed to be redundant to tell us the scale of the crisis. You mentioned yourself, dated Brent trading at futures plus $40, $50. Where do you think the right price point to look at for the scale of this crisis? Will that change now? Going back to Brent futures is a reasonable thing to do now, do you think the pricing structures have held up? The window in Platts Dubai got a lot of criticism last month because Total seemed to have a heyday there. What was your sort of thoughts on how the pricing structures held up during this stress?
Well, I think it hasn't. It's been discombobulated, let's say that. There's been no real convergence on futures versus physical, and at some stage it will have to catch up. We saw WTI catch a bid and invert on Brent, most of this week, and that's mainly because of the roll dates versus the June contract and the May contract. But for now, if it's not physically delivered, it's a financial product, and that's where people are going to be, where funds and whatnot are going to be speculating. But at some stage, it will have to converge if there's no real addition to supply coming through. There's no agreement reached. I think fundamentally they've diverged far too much, and they're going to have to come together at some stage.
Would there be a trigger for that, or would there need to be obviously a permanent deal done, a signed and sealed agreement, or where would you see the trigger to close that gap?
Yeah, I think there would need to be conviction, whatever deal's been done, and something that's going to stick. Perhaps no more missile strikes by Iran on Lebanon, or perhaps no more ending of culture rhetoric. Things like that make people very nervous, especially in financial markets. So fundamentally, we're still very tight. That's not going to change with 15 ships coming through the Strait. And it's not going to change in 2 weeks. So until we know there's going to be a consistent opening in the Strait where flows are going to come back, of course, there's reroutes through via Yanbu, which is to help alleviating the situation, but it doesn't account for what's been taken offline already. In a sense, this is a very Pyrrhic victory for the US, and we're sort of in the same spot where we started before any invasion. And all it's done is rattle markets, rattle economies, and made people quite sad given, all the potential loss of life and actual loss of life. So I think there's no easy remediation to this. There's going to have to be a concrete solution that sticks.
Given the amount of questions you indicate remain unanswered and are still going to have to be resolved, would you expect the initial sort of collapse of pricing today to give some back? It's holding at like 15%. I would have thought it might have give back a few percent by now. Once Europe and America gets involved, maybe it will.
Sure. I mean, it's all sentiment for the time being. Everybody feels all happy that there was the tweets overnight and there was agreement in principle by both nations. But as we've seen many, many, many times with the TACO and also the response from the Iranians, that can change in a second. So, personally, there's a lot of skepticism I'm seeing in the market. And until people feel comfortable, I think we're going to see some more swings.